Apparently, Snapchat is the backbone of the U.S. economy. What's up, everyone? I'm the John Madden of the Moving Averages, and I hope you're having an absolutely fantastic day. My goal is to enrich your life by presenting some education and some information on this video that can help you day trade better, more profitably, and more consistently. Keep in mind, you do not have to make money every single day to make money every single month. In fact, some numbers for you. If you do $600 net on average 200 days out of the year, do the math, it's $120,000 a year. That is truly terrific. Let's go look at Tesla. And number one, talk about the sentiment here. First and foremost, what is the trend on Tesla? The trend? Bearish. All right, perfect. Number two, let's look at this bullish candle. This bullish candle that opened on yesterday, which is Monday, May 23rd. Today, we opened below the open of that candle. What's the significance of that? Well, what it means is every single buyer in here was horrifically trapped at open. Everyone who bought yesterday is losing money. They're hosed. They're sad. They're scared. They're selling. They're fearful. They're panicked. All the things. Here's a 3-minute chart on Tesla, and this is how I shorted Tesla on the way down. Here is your 10 EMA trade, because since it opened below the open of yesterday, you were able to trade it more actively, more aggressively. Here's the bullish candle, very first one that closes below the 10 EMA. And here is your second bullish candle. So your entry somewhere right around here, I'm sure. Stop loss somewhere right around here. And the exit, bang, right there. 3 nice bear candles in a row. 1, 2, 3. Take your exit and make your gains. That is exactly how I shorted Tesla today. Now, most of you are familiar with or have heard about the snapback strategy that Matt DeLong is making famous all over the internet. Did play that one as well, bullish, right? So it broke below the first low of the 3-minute and then came back above the 3-minute entry. However, that strategy just did not work out. So you lost small in that strategy, eventually moving the stop loss below the low of this candle, below the low of this candle, below the low of that bullish candle. So when we lost in the snapback, which did occur, it was about a 0.8R loss, not that big of a deal. In fact, if I pop over here, what you'll notice is you'll see Puddin' Sprinkles, what an interesting name, said flipped after stop out on Tesla and won 1.5 on the bearish trade and got my money back. That's the goal. You're going to lose on trades. There's nothing you can do about it. Follow the trend, play a strategy, and make more than you lost. So this is a quick screenshot of the Tesla win, for me at least. So this was after the loss was about $8,284. Again, that's not average for me. It's generally somewhere around $1,000 to $2,000 per day, give or take. So this was a very, very nice day overall, but it was a gorgeous, gorgeous drop. And again, analyzing the daily chart, analyzing these two candles and analyzing the 10 EMA strategy helped significantly. If you do want to day trade with me in a one-of-a-kind mentorship, I do have one launching. If you're interested in it, it's going to be called the Disciplined Day Trader. We're going to be talking about everything: day trading, fades, 10 EMA, identifying gaps, volume analysis, day trading options, pre-market plays, trading plan and discipline, all the fun things. And I do have 6 slots remaining if you want to hop in. It is a little bit more of a premium program, but it is designed for traders who want to do this full time. And most importantly, for people who want to revolutionize their portfolio, but more importantly, their mind and how they can impact the world. Ladies and gentlemen, I absolutely love you. I hope this video was helpful and beneficial. You are tremendous. And until next time, love life, live life, and trade it. Bye.